that we got from the government last evening can have far-reaching implications than what anybody could imagine till few days back. Talking about the world, as someone rightly said, I've quoted this statement several times that we live in an interesting world where if you are rich, you get bailout. If you are rich, you get bailout. If you are poor, you get handout. But if you are somewhere in the middle, you get left out. And that left out feeling of a large part of the middle class which is getting reflected in a vote for Brexit, is getting reflected in rise of leaders like Donald Trump, is getting reflected in the similar rise of leaders in other European countries. I think this trend is likely to continue for some time. Most of the traditional media, most of the big political pundits could not predict Brexit or the victory of Donald Trump, but there are some large underlying trends which are underway, which have been underestimated. Talking about Donald Trump, or in the similar vein about the Brexit, it seems that over the last couple of decades, the benefits of globalization, the benefits of cheaper money which has been produced by the central banks of most of the developed world have not been distributed equally. So the gains have gone to a small part of the population, while a large part of the population thinks that they are not equal beneficiary. So the debate about 1% versus 99%, about the inequality, about the Wall Street and the Main Street, the difference between these two, I think some of these debates, I think the murmurs have been there, but the political repercussions and how it can direct the global economy, these are the things that have been underappreciated. And our view has been that over a period of time, I think we are likely to see some paradigm shift, we are likely to see some seismic shift, if I can use the word, which will have huge repercussions, and I'll try to explain that. As I mentioned that some of these gains from the cheaper money or from the globalization has actually, or let's say immigration, have actually led to huge amount of job losses in some of these countries, and there is a bit of disenchantment. Their incomes are not going up and they are feeling a bit left out, and that's why the people like Donald Trump have won the election. Going forward, one thing that we must be sure of, that election rhetoric is one part. The US as a democracy, as a country, as a society, I think has lots of checks and balances in system. Once you are in the position of that kind of political power, I think the way you behave is very different than the way you talk about in the election campaign. So while one should not get too worried about what all has been said in last 3 or 6 months by the Republican Party candidate, but I think once you become the president, I think you will behave very differently, because this is the most important, one of the most important economy, one of the most important political power in the world. But one or two things we must keep in mind, that his main agenda has been, as the slogan goes, make America great again, or whether the sweeping things about the immigration or about the trade treaties or about having a fight with some of the countries who do the dumping may not be on, but at the same time, the longer term objective of ensuring that jobs come back to US, manufacturing comes back to US, services come back to US, what does it mean? It means that over a period of time, the current account deficit in US is likely to go down. If he is able to achieve even a little bit of what he has been mentioning in last 1 year, that means a substantially lower current account deficit or a current account surplus, which is a very big thing. How it is a very big thing? Because over the last several years, as US has been running a large current account deficit, what US does, because the dollar is a reserve currency, when the US imports something, a toy from China or any service from India or anything from Europe, what they export is US dollar, which is invested by the world. But at the same time, because it's such a large currency, the reserve currency, large number of corporates and economies have borrowed in US dollar without getting too worried about where will they find US dollars when the maturity comes. And my belief is that I'm just guessing a number, but I think it's a good guess. I think almost $10 trillion of US dollar borrowings are there in the world. If the US deficit goes down over the next few years, if the US dollar supply is going to be less, then any company, any economy which has US dollar liability is going to be in trouble. The another thing that's likely to happen in the world, and I think that's after Brexit, I'm very sure, after Donald Trump's victory, I'm very sure, we were one of those few who have been saying in last few months that Trump should not be written off. And what we believe is that whatever monetary policy could achieve post global financial crisis in 2008, they have already achieved that. Asset prices have gone up, there is stability in the financial system, overall solvency or liquidity crisis is not there, but at the same time the desired impact on the economy has not been achieved. The growth has not gone back to the pre-2000 era. Jobs are not creating as much as one would have expected at the income levels what one would have expected. Of course, the unemployment rate has gone down, but overall the middle level incomes have not really moved up substantially. So if the monetary policy has already run its course, whatever they could do in terms of the forward guidance, the quantitative easing, zero interest rates, negative interest rates, all kinds of things, and now talking about the helicopter money or whatever, but it has not achieved. The mantle of growth has to be shifted back to the political class, has to be shifted back to the fiscal policy, and that has been our big call that if Trump comes, it will be faster. If it is Hillary, it will be slightly slower, but it's likely to happen. And because that both the House as well as the Senate have got the Republican majority with the president, now there is a high likelihood that this is likely to happen faster. So infrastructure spending by the US government by borrowing more money, by ensuring that pension funds put more money into the long-term infrastructure projects. Simply they are already investing at negative yields, they are buying equities despite rich valuations, they'll be happy to invest if you create the right conditions. In corporate sector, which is sitting on so much of cash and deploying that cash world over either in money market or doing buybacks and dividends, there would be fiscal incentives, there would be taxation changes in such a manner that corporates bring back cash and they invest in the country. And if you create conditions, if you create the confidence that US means business, the government is likely to invest in increasing the productivity, obviously corporate sector will get enthused at some point in time, and they are already sitting on so much of cash. And there is a genuine need of infrastructure. This is not about only a Keynesian policy where if there is a slowdown, government should just dig a hole and then just fill that hole so that you can create jobs. There is a genuine need of infrastructure in the United States. If you travel to US, whether it's roads, whether it's bridges, whether it's railways, whether it's airports, whether it's electricity grids, everywhere the infrastructure is very old and they need a lot of investments. And I think that investment is likely to happen now. And that will be very positive for the US structurally. I'm sure that Trump's victory, because of the statements or because of the election rhetoric in last 1 year, has created a lot of uncertainty, has created a lot of concerns in people's mind. It's not going to go away. He's going to renegotiate the trade treaties with the rest of the world. The new kind of relationship will get built. I mean, this is a new world order after Brexit, after Trump, and we'll have similar moves in some of the other parts of the Europe. So I think this is a new world. At the same time, our call that we have had the best of monetary policy and now fiscal policy will take the reins, and structurally that will be a positive for the world. What the world needs to get worried about is a stronger dollar. So anybody who has a dollar liability but not a dollar cash flow, I'll get worried about that company as an investor. I think that's something that people should keep in mind. Now, a little bit about the US and India relationship. How will that get impacted? My sense is that despite all the election rhetoric, to make the same point about the immigration, the Indian engineers taking away the jobs of US engineers, or the Indian call center people taking away the jobs of Indian US people, whatever he mentioned in the US, my sense is that I think geostrategically he will find India one of the best partner in this part of the world. He's been very vocal about the dumping by China. He's been very vocal about the rise of fundamentalism in the world, which is India also fighting for. And that's why I think our relationship with US can only become stronger. My sense is that in next few years, despite all the concerns, there could be one small collateral damage here and there because of the change in the policies in US, but structurally I think India and US will be a lot more closer in next 4 years under Donald Trump than what anybody would have imagined. So we have a very different view on that. Now that's about the world. The only thing I will add about, if you contrast where the world is moving. So you have a world where, whether it's US, you saw the vote on Brexit, where people are anti-immigration, people are anti-trade, people are anti-globalization, people are talking of a lot of protectionism, hardcore nationalism. And you look at what India has done. In last 2 years, we have carried out the most impressive FDI reforms in our history. We have carried the most impressive FDI reforms in our history. And the ease of doing business, the focus that we have opened up ourselves. We want global competition. We want the best global companies to come and do business here, which is very different than what the world is doing. You contrast the world with India, a world where there is more and more QE, there is helicopter money, there is more cheap money. Now they are talking about more fiscal spending, increasing the debt to GDP, doing the forward guidance and all that. What India has done? The most credible monetary policy reform, a highly credible fiscal consolidation plan. Our fiscal deficit today is one of the lowest in last 10 years. Our positive real rates, where the world is at negative real rates, our positive real rates are one of the highest in the last 10 years. Despite the slowdown in the economy, we had the courage to say that we will actually improve India's macroeconomic stability by taking the right step, but will take the short-term pain. Is very different than what's happening in the rest of the world. What's happening in the rest of the world, large number of emerging markets are losing foreign exchange reserves. They are trying to depreciate their currencies. Every country in the world is trying to depreciate their own currency. What India has done, it's been one of the most stable currency in the last 2 years. Our foreign exchange reserves have gone up by $100 billion. Large part of the world is dealing with declining growth, declining inflation. In India's case, our growth has been inching up. So when you put India in a global context, I think India is, in terms of policy perspective, in terms of overall macroeconomic situation, in terms of where we are heading, is very different, very different when the large part of the other world. And that's why I think large number of countries and the policymakers in the world will appreciate the efforts that the India has been making towards. That's about what's happening globally and where I see India from a global context. Now let's talk about the yesterday's move, because that has been a historic move according to us. And it's not something that has been done out of a head, because there has been policies pursued in last 2 years which are aimed at an objective, which is to get the parallel economy into the mainstream economy. You look at one after another. In fact, most of you would have heard me in various forums or in some of these Nivesh ki Baat, or maybe at some other places. We have been talking about it continuously, that series of measures, whether it's the Jan Dhan Yojana, whether it's the digital finance, the number of payment banks, the small finance banks. We have given more bank licenses in last 2 years than we have done in 20 years. The amount of the direct benefit transfer, you look at the GST, you look at the way tax infrastructure is improving, the Benami transaction law, the black money law, the changes in the real estate regulation, changes in the gold market, the requirement of PAN account, PAN number for various purchases, so on and so forth. I can just go on and on and on to basically ensure that over a period of time we do a major crackdown on the black economy and we get the parallel economy into the mainstream economy. It will have couple of major repercussions, and yesterday's move is really a very big move. It will have huge consequences. I don't have to elaborate that more on that, because I'm sure you deal with business community, you deal with people in your day job, and you know what kind of impact it can have on India across the board. This will also increase India's tax to GDP ratio. As the tax compliance improves, India's tax to GDP ratio in next few years can improve very significantly. If government's tax revenues improve, what will government do with that? My sense is that they will invest more money in infrastructure. What can be better than that? And the third thing that can happen, so you get the parallel economy into the mainstream economy, the government's tax revenues go up, which can be invested in the infrastructure. And the third thing important is also, as you get the savings into the mainstream system, as everybody transacts online and everybody, all the finance moves to the digital world, what will happen? Our household savings, number one, will go up, and a larger part of those savings will come to the financial assets. And we have been making this point for last 2 years that flows into our industry, flows into the financial savings will continue to surprise on upside, because a large part of the economy is not even a target segment for us, because those people are not even looking at an equity fund or a bond fund or an equity or a bond instrument. All those will become potential instruments, both because of conviction and the compulsion. Compulsion that I cannot go anywhere else and returns are not there, and conviction that yes, economy is going to do well, funds will do well, and I will get good returns, and there are tax incentives. So look at from liquidity perspective, tax perspective, transparency perspective, and the conviction that economy will do well, I think the flows can actually increase substantially. And that is also very good for infrastructure build-up, because corporate sector may be in trouble, the banking sector may be in trouble, but if the government spends more money and the households have more money which invest in our funds, and we can invest that money both in the corporate bonds and the equities, this is very good from the investment perspective. So structurally, this is a great move according to us. But anything which has such a large long-term gain but has a lot of short-term disruptions, you have to take that also into account. And why the market is worried, of course there is one about the concerns about the Trump, which I'm sure over the next few weeks or few months, I think people will have a different view, but also that when you are cracking down on such a large parallel economy, which you know how large it is, so any kind of discretionary spending, any kind of sector which has got positively impacted in last few years, where the cash from the parallel economy goes, will surely get impacted and badly impacted. For example, real estate, particularly the high-end real estate, will get impacted if somebody has lent money in the loan against properties to businesses which have thrived on the parallel economy, they will get impacted. All kinds of, whether it's the jewelry buying, whether it's some of the other discretionary buying, which has been a result of the parallel economy, they will get impacted, no doubt about it. Even the GST implementation, which will happen over the next few quarters, they will get impacted. So a GST implementation, the crackdown on black economy, you are moving away from a system which has been so entrenched for 60 years, and you are moving to a completely new system. So that the people's DNA has to change, people's way of working has to change, a way of thinking has to change, that I have to pay taxes, I have to go to the mainstream system, I have to go to the banking system only, cash won't be there. I think all these will create disruptions in the short run, but structurally they are very positive. And I think but for the Trump, but for these moves, markets wouldn't have corrected where they have corrected. I think in next few days, few weeks, few months, the more uncertainty about the US dollar, about let's say some Trump's policies, about the crackdown on black money, about the GST implementation or whatever, I think this will provide a good entry opportunity to the investors. In fact, in last few months, we have been mentioning that one concern that we have, if you read our monthly market outlook, last outlook we specifically mentioned about two major concerns we have, and Nifty was, if I remember, close to 9,000. The two concerns that we have, one is the global political calendar, which can throw surprises, and very certainly we were indicating that I think like Brexit, you may get some more surprise in store. when the US election results come. And second is the rich valuations. When valuations are rich, if you get any kind of negative news, then obviously there could be some bit of corrections. But now that some bit of over the last few months, I mean YTD markets are like hardly up 2-3-4%. We've got some time correction, we've got some price correction. I think from here on, as the earnings improve over the next few quarters, once the pain on the consumption economy in next 1 or 2 quarter, after 1 or 2 quarter the pain will increase, but after that it will subside, and there would be a new world, there will be a new kind of system, it will emerge, and which ultimately will be very good for us. I think that will create which will pave the way for a structural bull market in India. So maybe I'll stop here and would be very happy to take your questions.